Logan and I are, we both work with Calvert Home Mortgage Investment Corporation. We are underwriters here. We're going to share information. I'll let Logan introduce herself after I kind of go through some things, and then we'll get it going. So I've been with Calvert for almost I think it's 9 years today. So it been here a little while. And prior to that, I was a mortgage broker for a short little period of time. And prior to that, I came from a total different industry. So it was a big change for me back then. But yeah, I've been doing this for quite some time and enjoying looking at deals that people send our way. And we've kind of morphed along the way a little bit, and our focus is it hasn't really changed, but we'll get into that a little bit. But we're still doing a lot of flips and BRRRs, and we'll talk about that, and then we'll talk about all the other types of deals we do. So let's get right into it. Oh, okay, good. So Calvert, we became a MIC in 1982. Prior to that, we actually were a mortgage brokerage since 75. So really we've been around since 75. So pretty close to 50 years coming up here. In 2022, we lent out $336 million on a total of 859 loans. This year, our goal will be very similar, just as the markets stabilize. We're looking at doing something very similar. It might be a little bit higher than that. What we focus on, as I alluded to a little bit earlier, is short-term lending with strong exit strategies. So the flips, the BRRRs, oftentimes it's short-term purchases or even bridge deals is really our focus. Again, I'll go into a few other types of deals that we look at, very similar to other private lenders. So our mission at Calvert is to be trusted advisors, offering an effortless experience for the personal and financial success of others. Really important for us to be able to help clients and to be a stepping stone to improve their situation. So as you'll see and as you interact with underwriters, that's really what we're focused on and our goal is always to help and how can we help and be a short-term solution. So next slide. So at Calvert, we do things, I guess, a little bit different with respect to some things than other privates. Some of the things that make us different is our quick responses. So we can get to a commitment letter usually within 24 hours. And when we talk about a commitment letter, we tend to put out commitment letters with very few conditions. We want to ensure that our commitment letter means something, and there's not a lot left to work through. Some deals you just can't do that, but for the most part, if we can get a full package, we can work through everything, inclusive of the valuation, and I'll go into that a little bit as I talk through these points. We can fund as quickly as 24 hours from complete deal submission. I had an example last week where I got the deal at 5 p.m. We were ready to fund by noon the next day through a lawyer. So we can turn things around really quickly. So if you find yourself in a situation where you need a quick turnaround because another lender pulled out last minute on you, or for whatever reason, you just need a quick turnaround, we are often the best solution for that type of scenario. Kind of talked about this earlier, but we do valuations internally. So we have 4 appraisal candidates or appraisers internally that do our valuations. They do a desktop valuation. We tend to get as much information as we can to be able to provide to them so they have a very clear picture of what they're valuing. We always confirm our desktop valuations with a drive-by, so we will ensure somebody goes by the property to see if there's, well, I mean, could be a lot of things that affect marketability, like big power line behind the house, or a next door neighbor that that has a junkyard. Just little things like that. And then sometimes it's just confirming there simply is a house there. We've all heard those horror stories of trying to lend on something and it doesn't exist. So we always confirm that, but really it's our internal desktop valuation that gets us the ability to move forward. We will structure our commitment based on our in-house valuation. What that means is basically you don't require an appraisal on most deals. We will require an appraisal when the value comes in over 1.5 million. We'll also require an appraisal when they are multifamily type of deals or commercial bay type of deals. So you'll see, for the most part, we won't require it, but when we do, we will be as clear and upfront as soon as possible that we would need the appraisal. So we'll let you know. No voicemail. So none of us have voicemails for you to be able to leave that message. But there is always somebody to talk to. So what that means is you're going to call in, you're going to ask for me, someone's going to patch you through to me. If I'm on another call or something like that, it'll go back to the front desk and they'll say, hey, can we take a message, or can I send you to somebody else? We're never, we're not dedicated to any specific broker or brokerage. So you can speak to any underwriter about any deal. So having access to somebody, if you need a quick answer, is really what we're trying to provide there. You can also call my cell or text me or email, whichever way is best for you. We're fully available to be able to provide an answer. Legal documentation. In Alberta, we prepare legal documentation. We do not require our own lawyer. We actually prepare the documentation and send it to the lawyer acting for your client, the borrower, or the the borrower. So what that does is saves a little bit of money, and it saves quite a bit of time where there's no second lawyer involved, where we're just sending information directly to the lawyer. To the borrower's lawyer, sorry. So again, allows quick close. So that's kind of how, one of the big reasons, along with the valuations, how we can do such quick closings. One of the other things we offer is an in-house signing. So what that means is basically we sign directly with your client. We use these when we're just doing very simple addition of a mortgage. So say we're doing a second mortgage as an equity takeout or a debt consolidation, we have the ability to sign directly with your client. So again, saving time because there's no lawyer involved, and then the money on the lawyer fee for that they would have had normally. There is a title insurance fee with all of these. So there is a little bit of an additional fee, but we get those on all of our deals. So either you're paying it through your lawyer because they're getting that for us, or you're paying it directly with us. So you'll see that, and we'll be very clear with that up front. No renewal fee option. So if you're in good standing and you need a renewal at maturity, we would offer a renewal. We do not charge a renewal fee when everything's in good standing and we get back the renewal documents. If we don't get back the renewal documents, there is a little bit of an administration fee. So just keep that in mind. Most private lenders always have a renewal fee. It's how they make their certain return on their deals to maintain that. So it is something different than other privates. Always your client, really important to us. When you introduce us to a client, we are going to ensure that bond stays intact. So, especially in our flip and BRRRR deals where we're always trying to get that next deal with them, so it's a long-term type of client. They might call us directly after we do the first deal. If they do, we have a really good system to be able to look them up quickly and go, yeah, you were working with this person, and we get you back involved really quickly. We definitely always want that relationship. So, so as soon as, if they call us directly, as soon as I get off the phone, I'm going to call you and say, hey, so-and-so called, give them a call. They're looking at their next deal. So again, really important to us that, you maintain that relationship with your clients. So some of the not some, these are all of the types of deals we do. We do flip financing with as little down as $10,000. We do BRRRR deals. BRRRR deals are very similar to our flip financing as far as terms and rates. The BRRRR just stands for buy, renovate, rent, refinance. A lot of our clients use this to be able to buy maybe a little bit of an older property, fix it up, increase those rents, and then get that refinance done and then hold it, as a cash flowing property. Very good tactic. Some people use a mix of both of those tactics, flipping, selling some and then BRRRRing some where, they're long-term holds. So just depending on what your client's goals are and plans are, both of those work in those scenarios. We also do a lot of short-term and bridge loans. When I talk about short-term, I'm usually talking about interim purchases where someone, just needs to close on a property and they're either going to sell it or they'll get refinanced down the road because they either there's a timing issue with the new lender or they have to do something before the new lender would be able to take it on. So those are, we see a lot of those. So again, we call those interim. And again, so those top three lines are really our bread and butter and what we focus on, those short-term solutions. After this, the debt consolidation, equity takeout, those could be short-term as well. Sometimes where, someone just needs a little bit of money to do whatever it is, and then they're going to pay us out in 2 months with the money that's coming from some other place. So those are great and short-term solutions. So we can always look at those. Debt consolidations usually tend to be a little longer term because, we might be paying out a debt and then we might need to watch their credit score rise a little bit. We might, when I say we, us and you, the broker together, might need to work on a few things, get them back to a better spot. And then, then the takeout might be a refinance down the road to after they do all those things. So we will look at that consolidation, equity takeout. Those are the ones that really fall into that in-house signing because we're really usually just adding a mortgage onto the property. So, we're doing one this afternoon where it's a pure equity takeout where a guy's using equity in his property he's an investor and he's using it for renovations on other properties. So that's one that we're doing in-house, saving them a bunch of money. We started looking at the deal last Friday. We're closing today. So pretty quick turnaround on it. So that's just an example for that. Purchase first and second mortgage. So when we say purchase, these are usually a little longer term. Sometimes it means, where we would be, they need us to come in, help them purchase, but they need to work on a few things. And sometimes it's, like a self-employed person that needs to claim a little bit more personally or something like that. So they need a couple of years of NOAs and maybe they already have one, but next year will be the next one. So we're going to be into it for maybe a year, maybe a little bit over once the refinance happens, but it allows you to, hey, you just need this private solution for this 1 year. Once you, claim this on your next NOA, then we'll take it to so-and-so. So again, we're an intermediate solution, but this case, it's just a little longer term. I didn't clarify when I speak to short term for us is usually less than 6 months. Longer term are usually 1 year or longer. So that's kind of the delineation. In between 6 and 12 months, we will see those, but they're also considered really short term, where we renew once and then we get paid out between that 6 to 12 month period. We will look at construction loans, construction spec or with defined takeout. We look at them a little bit differently because defined takeout, it's a little stronger. Again, these are short-term solutions, just not really our bread and butter. We will do them, but they oftentimes these are a little bit more convoluted type of deals. So we don't see a lot of them, I guess, is really what I'm saying. But when needed, we can take a look at them and see if we can be the solution. So where do we land? So we land in one of the things I didn't say for people that are in Alberta. We actually we land in Alberta and we land in Ontario. Those are the two provinces that we currently look at. So if you do have a deal in Ontario and you're registered there, or you can co-broker with someone that's registered there, we will take a look at deals for Ontario. Our lending criteria is a little bit different, but if you have a deal, just give us a call and we'll go through that. So where do we land? This applies to both Alberta and Ontario. We really want to stay in the more populated areas. We want to land 10K population within city limits, or within 10 kilometers of city limits of a 50K population, or 25 within from city limits on a 100K population. So really we're looking at the more populated areas. Not to say we won't look at other areas, but it will be deal type dependent if we would consider that deal in more remote areas. But always recommend to just pick up the phone, give us a call, and we'll go through what or if we can do anything where the property is located. Minimum loans, we don't really have a minimum loan. The minimum will really be dependent on the illegal lending rate, which is like a 60% lending rate. So because once you determine your APR, because that's based on fees, everything, right? So when your minimum loan is really low, you can have an APR that looks really high because of that. But in the end, we'd figure that out right away as soon as we saw a low loan, and we would discuss it and figure out a way if we could make it work. Max is 1.5 million on loans. So we're really not looking at loans higher than that. Again, with the focus on short-term type of stuff, that's really where that niche fits, on those lower dollar amounts where you turn them over a little bit quicker. Details. So we focus on average single family homes. We lend to corporate borrowers with a personal guarantee, and we will lend on as is value for new builds. This is really important. A lot of clients right now, for whatever reason, they bought an investment property, or they bought a property that they were going to live in and now decided not to. But since they bought it, the value might have increased significantly. I mean, there's a chance it might have decreased, but if it increased significantly, we can actually look at the as is value versus the purchase price. Most lenders do not do that. And that's okay. That makes sense why they wouldn't, but we will consider that. And oftentimes it means that, sometimes the deposit, and it might be 10%, is all that's needed, because the value now is so much higher that there's enough equity in there to do the deal, just with their deposit in it. So they might not need to put more in. Oftentimes these are, there's an exit coming to, they'll use our loan, utilize that equity in there, and then there's a refi within 3 to 6 months, or maybe they just decide we're going to sell this. And I'm going to get into a little bit more about that in the next slide. We do first and second mortgages. So really we lend up to 75% loan to value on most loans. Our max would be 85% on a bridge deal on an unconditional sale. So if we're looking at doing a bridge deal, very short term, and then again, I'll get into that a little bit more, but and it's unconditional. Say they need us for a week. we can sneak up to 85% because of that strength of the exit on a quick turnaround. I'll take a break. Anybody have any questions right now? You can also just type them in the chat if you want. No? Okay. We'll keep on going. So just to speak to our interim purchase and bridge, again, I'm focusing on these, but we will do those other types of deals. And if you have any questions about those other types of deals, do ask. I'm going to talk to interim purchase and bridge, and then Logan will kind of finish up with talking to our flip and BRRRR program. But again, ask any questions along the way. So with respect to interim purchase, where we were talking about the example I was just giving you, where they buy a property and the purchase price has increased, we can look at the as-is value. This is the product that would fall within. The rates start at 10.49%. They're interest only. They're fully open to and no pay down penalty or payout penalty. Our max loan to value on these is 75%. Again, just remember that it's based on as is value. So very important when you're looking at deals because that might help you get these types of deals done. Fees in Alberta, we charge a 1.5% lender fee. There is a $2,000 minimum fee. We do have a commitment fee, brokers set their own fee. We add the broker fee to the lender fee and call it a commitment fee, and that is put on the commitment letter. It's called the commitment fee. The commitment fee is capped onto the mortgage, so it's not paid out of pocket. It becomes part of the total mortgage, when it's offered. Just a couple things about fees. $2,000 minimum fee. We do have a rush fee if it's needed. If we're funding within 48 hours, I believe in Alberta. That'll be very clearly communicated. So if we have the ability to stop, drop, and roll, get your deal done really quick, but it does cause interruption on other deals. So we do charge a premium on some of the deals, a little bit of a rush fee. If there's multiple properties, if there's multiple condos and multiple condo doc review, we may have an additional fee on those. Again, as soon as we see it and we quote it out to you, you'll see all the fees involved. So it won't be, sorry, go ahead.
I was going to say, quick question. Sorry to interrupt.
No, that's great.
When you say commitment fee is added to the mortgage, are you going above the 75% loan to value in that case, or you're holding it at 75?
Great question. Sometimes it's in the 75 and sometimes it's on top.
Depends on the deal.
It's really deal dependent, because 75 is really is our generic number. Some deals we only go to 65, and then that bridge we go to 85. We wouldn't cap on top of the 85. We would max out at the 85. So it's deal dependent. But again, we'll be very clear on the initial quote what that looks like. So as long as just be clear what you need, and it doesn't work at 75 less fees or what, you know what I mean? Like if you're really clear in your submission, then we'll try and work to make it work on our side with what you need for your deal.
Appreciate that. Thanks.
Okay, cool. So that's interim purchase. Bridge is a little bit different, not much. Rates are a little bit higher. Our max loan to value, again, on unconditionally sold property, 85%. Term is 6 months, again, interest only. Often these are paid out in very short term. The term doesn't really, the 6 month term will be there, but oftentimes, again, they're short term. But if it's a month, if it's 2 months, we can still do these types of deals. Sometimes one thing I want to point out is bridges. So if someone's buying something and selling, but it's only listed, right now it's not sold yet, we can still consider that in our bridge financing. We just wouldn't go to 85% loan to value, because it's not the trigger's not pulled yet on that sale. So, you know, depending on the scenario, we would again review it and let you know where the maximum loan to value is. So don't, so keep in mind, like it would fall on the bridge if you have someone looking to buy a property and they haven't quite sold yet. We can review those and fit it within this in this deal type. Again, 1.5%. Brokers set their own fee, 2,000. Oh, and there's the rush fee down there, up to $1,000. Rush fee, commitment fee is added to the mortgage. So that's the high level of these. Again, always suggest if you have any questions about these, give us a call. Here's how you could submit a deal if you you need us to take a look at it. And basically you can submit a deal through Filogix or just directly via email. Some brokerages have very strict rules, so follow your brokerage's rules as to how you can submit. We are on Velocity. We haven't fully integrated that yet, so it's not on this slide. But that will be an option shortly. It actually already is an option. So if you do submit through Velocity, it'll come through to us and we'll be able to deal with it as well. Oftentimes, so we don't have a back and forth in Filogix right now, meaning you'll just submit your app and your bureau through Filogix, and then the rest of the documents you just submit via email. So again, it's up to you if you choose to use Filogix at all. We're fully okay with just the email, getting the email. If full package is submitted, we can provide a commitment letter in 24 to 48 hours. It can be done quicker. Just depends on the scenario, and the full package that's always the caveat, right? Like we always want to try and be as few conditions as possible. And that's why, oftentimes we don't get to commitment letter quick, but we'll give you a quote quick, meaning we'll look at the deal and we'll say, okay, here's what we need. We're not quite ready for a commitment letter yet, but if you get us this, and this, then we can, move towards the commitment letter. So again, we want our commitment letters to really be mean something on paper versus full of a whole bunch of conditions. So in interim purchase, the documents we need are the usual app and credit bureau. We do want to see the most recent NOA. It's not going to kill a deal if they owe taxes. We just want full disclosure. We want to make sure that there's, part of it is, are they filing taxes? And then do they owe taxes? Is there any issues with their affordability because they have a big CRA tax bill? So confirmation of funds available for down payment and carrying costs. So sometimes people really can't afford this property, but they have the money for down payment. They can carry it for the period until they're going to sell it. So in other words, they have the ability to close on it. They know they have equity in it because, the value's increased. So we're going to help them close and sell and, and basically get that equity out of there for them. So we just want to make sure that they can service our loan for the period until they sell. MLS listing or pictures of the purchase property, or the purchase contract. So sometimes if it's a new build, it's going to be all in the purchase contract. There will be the drawings, the specs, all that in there. If it's an older property, if it's MLS listed, that's usually all we need. If it's a private sale, we would require pictures of the property. Remember, I said we do in-house valuations. That's really why we need that. We need to be able to do that valuation. So we need to understand what the property looks like. We always do an interview. We call it an intro call, but sometimes deals are a little more convoluted. Sometimes the client isn't as clean as the next client. Sometimes we just want to work through a few things. And if we have that conversation, it allows us to work through. And then lawyer contact information. So that's what's required for interim purchase documents, bridge documents. So basically all the list of the interim purchase documents, plus the following. So evidence of financing approved with all conditions satisfied for the purchasing property, MLS listing or pictures of the sale property, and then accepted offer on the sale property with all conditions removed. And again, this is if applicable, depending on what stage you're at, we may or may not have that in front of us. But whatever you have submitted to us, then we'll be able to know exactly where we're at. And then mortgage payout statement or recent balance statement. So if there's a property that that you're selling and we're putting a mortgage on that to take the equity out of it to buy a new property, and there's a mortgage on it, we want to understand what that looks like. So again, I'm going to hand this over to Logan right away. Any questions about what we talked about today? Cool. All right, Logan, I will hand it over to you.
Hi everyone, I'm Logan. I am an underwriter here at Calvert. I've been here for about 1.5 years, almost 2 years in October. It's kind of similar story to Sherwin. I was very briefly a broker right before this, and then before that in a role completely in a different industry. So it's been a big learning curve, but I really enjoy the underwriting side of things. So yeah, just a little bit on our flips and BRRRs here in Alberta. These are our terms and fees. So as Sherwin kind of mentioned earlier, we can look at these with as low as 10K down. That has our highest interest rate of 17.99. And then the more they put down, the lower the interest rate goes. Our lowest interest rate right now is 9.99. That's with 25% or more down. Quick note on the minimum down payment, because a lot of people like to do that. That allows them to keep more money in their pockets for the renovations and the carrying costs. We just need to ensure that we are under that 75% of the ARV, and then we can consider it with the 10K down. If the property purchase price is over 800K, then we'd likely need at least 5 to 10% down. And again, there's 6-month fully open interest only payments. They can be paid out at any point. On these ones, our fees are 1.5%. Brokers typically match that at 1.5%, but you can choose to charge what you'd like. We do have that minimum fee of $2,000. And then as Sherwin mentioned earlier, that $1,000 rush fee, just in case it needs to be funded within the 48 to 72 business hours. And again, that's added to the commitment fee, or sorry, to the mortgage. And then another unique thing about us is that we can lend on the wholesale fee for the off-market properties. So we see a lot of our clients get their properties from different wholesalers here in Alberta, and then we just include that assignment fee as part of the purchase price. So they don't need to come up with that out of pocket. So that's kind of one of our main selling points with these types of mortgages. Next slide, Sherwin. And this one is an example of a flip of the month. Now, this one's an Ontario example. So the only difference here with it being Ontario was the fee. In Ontario, we do charge a 2% fee that is split with the brokers 1-1. That was really the only difference. In this scenario, he got this property under contract for $186,000. This one was kind of unique because he wasn't doing any major renos. It was a matter of kind of cleaning it up, doing some painting, little fixing here and there. He held this property for 30 days. And the way we structured his down payment was he had another property that he owns that has quite a bit of equity in it. So what we were able to do was a blanket mortgage across both properties, the subject property and his owned one. And we used the equity in his owned property towards the down payment. That allowed him to get the lowest rate of 9.99, as we were able to pull out that full 25% from that property. So really the only cash that he needed to put in was the renovation cost, which in this instance was about $5,000, and the carrying costs of the mortgage. Now he only held it for 30 days, so there really wasn't too many carrying costs there. He ended up selling this after 30 days for $252,500. So he made a net profit in under a month of $36,000. And on this one, our commitment fee was $3,720. And again, that was that 2% fee because it is an Ontario deal. But it's just a really good example of how quick somebody can get into a property and do some minor renos, some little bit of cleanup, and be able to make quite a bit of money in under a month. And then this is that same example, but just in our flip analyzer tool. This tool we send out to everybody as well. So when we've done the valuation on the property and we're letting you know kind of what it looks like, we'll send this to you. It's how we underwrite all of our deals as well. So in this example, mainly we're looking at boxes E and F. So again, number of months to renovate. It was only a month he held it for. His reno budget was at $5,000. His purchase price was $186. Did that $0 down payment because we were able to pull out the equity. So he's got a net mortgage of $186,000. His financing fees were $3,720 for the commitment. And then his total interest cost was $1,600 for that month. So he made quite a bit of money. His ARV was $252,500. Just kind of goes to show how easy it is to make money if you can get in quite quickly and turn these around quite quickly. This is a continuation of that flip analyzer tool. So in this one, what we really like to look at is box H. This shows the profitability of the project. So we take all of those numbers, the reno costs, the down payment, all of that stuff, and the ARV, and there was a net profit of $36,000. Total cash needed. So when you guys present a deal to us and we say, hey, we need to confirm that they have X amount, this is where we're getting that number from, that $12,000, and that's pulling from the renovation, the down payment, and the carrying costs. Of course, in this instance, there was no down payment, so it was really just his renovations and carrying costs that we needed to confirm. And what we do like to see is that return on cash invested number. We like to see that at about 20% or higher. So this one at 286 is a really good deal. And then it kind of box I kind of just gives you some different analysis depending on how long you hold it for, what the profit would look like. If you're holding it for less than a month, over a month, kind of the changes there. Were there any questions on this example or the flip analyzer tool?
I'm just looking. Wilma asks, can client use LOF as renovation budget? LOF line, is that
line of credit?
a line of credit? Okay.
Yes, they can use a line of credit. We just ask for bank statements, credit card statements, line of credit card statements. We just want to ensure that it's their account and that they have access to those funds. So we just need to see that it's a current statement within 30 days and that there's a name on it. We do like to see that the clients are putting in some of their own money, not just all borrowed money, but we can definitely consider lines of credit, HELOCs, JV agreements, things like that.
I just wanted to add something. Logan did say that we will be sharing this with you. What we like when clients or brokers such as yourself, they'll often rebrand this tool and as their own and send it out, and we are 100% okay with that. So you can provide this to your clients, for their use. We don't require it to be submitted, but it's always a really good tool to use for them to analyze their given deal.
And okay, so to submit a flip deal, it's very similar to all of the other deals that kind of Sherwin mentioned. Again, we can submit them under Filogix and email. We can do these with in as quick as 24 hours. Another thing that we like to do is personal pre-approval. This is a little bit different than your standard pre-approval. We're not giving you a dollar amount to go shop for, but what we're doing is we're collecting all of the personal and or corporate documents for the clients for when they do find a property. So personal documents, app, credit, notice of assessment. If they're purchasing under a corporation, we're totally okay with that. We just require all directors, shareholders to personally guarantee the loan. And then for the corporation, we would need the articles of incorporation, just confirming all those directors, shareholders, just confirmation that the corporation doesn't owe any taxes to the CRA, and the most recent year-end financials. So when we're doing a pre-approval, we can collect all of those stuff up front. And that way we can say, hey, yeah, everything looks good to go for the clients themselves. So when they have a property in mind, we can be really quick in underwriting the property or the project. We can also look at the property before they make an offer. So this is really helpful for clients that kind of want to go in without that condition of financing. They want to make sure they have that strong offer. We can, if they give us a reno budget, they have photos, if it's a private sale or if it's MLS listed, we can pull those, and we can complete an ARV for the clients before they make an offer. So that kind of helps them go in with what number of offer they should go in at. And again, without that condition of finance, if that's what they would like. And for the documents on this, very similar: app, credit, NOA, corporate borrower information, proof of funds. We kind of touched on this with Milma's question. So again, it can come from bank accounts, lines of credits, equity from another property, as I mentioned in that example. We do have a lot of clients who take advantage of that. And that's just easy because we treat that equity just like cash, and then that keeps more money in their pockets to do the renovations. The purchase contract, if it is available, of course, if they haven't yet put the offer on it, we understand it's not there. In that instance, we'd kind of just ask them, what are you thinking of putting an offer in at, and making sure that that profitability is there. And then the renovation plan, budget, and timeline. This is really important for us so that we can complete that valuation, because as Sherwin mentioned, all of our appraisers do everything through the desktop. So a very detailed plan, you know, what are you doing in the kitchen? Don't just say kitchen 20 grand. Where is that being broken up? What type of cabinets are you putting in? Countertops, that type of stuff. How long do you think it's going to take? And then the budget for each of those line items. And then that way we can produce a more accurate ARV, and the clients can feel a lot more confident going in with that offer. And then just a summary of the deal itself or the project itself. You know, what are they planning to do with this? Are they going to sell this right after, or do they want to hold this as a rental and then refinance it? All that good stuff that kind of just details why we're looking at this deal for you. This is an example of a renovation checklist that we've created here at Calvert. We started doing these just, it kind of helps people give us the details that we do need, because we were finding people were a little bit more general in those plans. So this just kind of breaks down exactly what I was mentioning, kind of paint, what are you doing there? Kitchen, what's it going to look like? Galley style, L shape, that type of stuff. I think the next slide is just a continuation of this reno checklist. And this will be sent to you guys as well. And you can just keep it on hand, send it out to all of your clients when they're interested in a property. And then just send this to us when they want us to do an ARV, and we'll get that going for you. Were there any questions from anybody? Perfect. So yeah, as Sherwin mentioned, like there's 5 of us now, 5 underwriters here. Our underwriting team has grown quite a bit in the last year. So you can reach any of us through our email there. Again, you can always call the office. There is no voicemail, so somebody will always be available to talk to you. We share a ton of stuff on social media, so I would definitely recommend to follow us. Just get all the tips and tricks and know when we have other events like this to follow.
Excellent. Thanks, Logan. One more call for any questions.
All very good. Thanks very much, both of you.
No
Thank
problem, Brian.
you. And thanks for your time this morning. Really appreciate it. As always, I know everybody's busy, so again, thanks for taking the time, and don't hesitate to give us a call if there's anything that you might not want to ask in front of everybody. Give us a call, reach out. We'd be more than happy to go through things with you.
Thank
All right.
you, guys.
You're welcome. Have a wonderful day, and hope to hear from you soon.
Take care, everyone. Have a great day.
All right, you too.
Bye now.